So Forex in 5 this week. We're going to quickly whip around developed markets. It's been dominated by the US story. So inflation came in this week slightly higher against the second print that's coming above expectations and showing a slight trend higher. This has sort of put to rest any worries around sort of panic cuts, inflation dropping too quickly in the US, at least for the time being. GBP and Euro, they've been sort of dominated by this US price action as the dollar strengthened. We'll see what the Fed comes out with next. They're still forecasting cuts, or at least they're still being discussed for 2024, but we might see a bit less policy loosening than we have once expected or maybe even feared. Over to emerging markets where there's quite a lot going on at the moment. Firstly, in Nigeria, a raft of regulatory changes. IMTOs having a bit more freedom to trade at different rates in the official window. This was intended to allow a lot of dollar inflows to be moved away from the parallel market over to the official, allowing the CBN to effectively report higher dollar inflows to make a more attractive investment proposition for foreign investors. The capital reserve requirement ratio for local banks was dropped. This meant that the Naira, which banks were having to put with the CBN on a daily basis, was no longer required. This meant that they weren't trying to lock up Naira as quickly as they could in T-bills. Hence, Treasury bill yields started increasing because there was less demand. This was coupled with a big 1 trillion Naira T-bill auction last week, which attracted a decent amount of demand. We saw quite a high bid to cover ratio, maybe not as high as people were hoping, but the big factor was the yield, or the effective yield after discounting, came in at around 23% versus 11% before. Massively more attractive for foreign investors. Estimate around a third of this demand came from foreign investors, so broadly speaking, maybe about $300 million worth of inflows from FPI purely on this T-bill auction. Obviously, $300 million won't move the needle long term, but if they keep issuing these auctions at similar rates, we should start seeing some strong dollar investment into Nigeria. All this would add up to quite an attractive proposition for the Naira. We expected this strategy, which now seems a lot more coherent rather than ad hoc, to have a real positive effect on the rate, which we saw momentarily. However, over the last week, we've seen actually a lot of weakness. Dollar turnover in the official window has been higher, sort of 400 million a day, about 4 times higher than what it was before. However, this has dissipated a little bit, which is perhaps a slight cause for concern. And this dollar demand seems to have come back over to the parallel market, and we've seen the rate actually touch 1600 today. Now, whether this trend is going to sustain itself, we'll see. Obviously, the economic macro fundamentals aren't brilliant in Nigeria because of inflation print, which is coming out this week, likely to reflect a higher rate. Plus, the official closing rate is in the 1500s now as well, effectively creating a floor for the parallel market. But we're still hopeful to see some appreciation, but the short-term trend at the moment, unfortunately, is quite a lot of depreciation. Over in Kenya, the CBK sort of instructed banks to sell dollars at a much lower rate than what they were freely able to do for the last couple of months. This created a quick bout of appreciation to the low sort of 150 levels. However, this triggered almost like a panic sell from the local banks from what we've seen. There was a big supply of dollars in the market today. We saw the rate drop about 10%, which is the biggest amount of appreciation we've seen in some time. The CBK actually came back in to buy dollars to try and stabilize the rate, even though their ultimate goal is to get an appreciation back into KES because they view it as such an undervalued currency. They couldn't tolerate this sizable drop in KES in the rate because it felt unsustainable. They didn't want to see that bounce. So we've actually seen the CBK buying dollars today. This brought KES rate back up to around 145, but it's fluctuating a lot. However, whilst this is a slight, manipulation tactic from the CBK to sort of tweak at what levels dollars are being sold at, it can only be seen as a positive. Nearly 9 months ago, maybe 12 months ago, we were trading 135 levels. It's good to see that we're back to that kind of range, and the sort of depreciation trend has started to tail off. Finally, Tanzania has found some stability. We've seen some depreciation over the last few weeks / couple of months. We seem to be hovering in the low 2800 levels. Obviously, banks are still issuing at around 2650, but it's good to see some stability there. Zafan's off. Big efforts are being made to bring the likes of Niger, Mali, Senegal back into the ECOWAS region after they threatened to leave, but that situation is still evolving and we will be monitoring over the next couple of weeks.